Ajay Srivastava joins us, and Ajay Srivastava is ready. Good morning.
Good morning.
What kept you busy in the morning? I thought you were supposed to join at 9:18, 8-9 minutes late, pushing in too many orders.
Listen, if life is this good, you wonder why one does get up, even at 9:30.
I know. I wish we had that luxury. Duty calls for us early in the morning. How
But
you
we
been,
have
my
done our
friend?
bit in our life.
How have you been, my friend? How
Oh, it's been
market treating you?
wonderful.
How market
Oh, it's
treating
been
you?
absolutely wonderful. That's why I just want to be 20 years younger. That's all. I don't want to let it go.
Well, glad to hear that. So, how market treating you, my friend?
Sorry,
It is
I
wonderful.
want
No,
I
It's
want I
I
want to make an interruption there. So, Ajay, what would the 20-year younger you do exactly?
you know the
In the markets,
the
huh?
the pace at which new themes are entering this country is just amazing. If you look at the new IPOs, look at the new consumer tech companies, look at the kind of startup which we meet quite of them at this point of time who are in the pipeline to come to this market. This market looks so dramatically different in the next 5-10 years that you hate to say that one day you might have to leave this here, because we have been used to Tata Steel, cement, kind of aluminum kind of stuff. But this world of 10 years down the line of India will look very different with only one disappointment. Only one disappointment is we are still so far behind in tech compared to the US. Leave that one segment out, and I think we got the most dynamic stock market economy country in the world today. It's so exciting to see. I can see 100 more players entering the IPO market in the next 2 years. All good themes, new themes in the market. What an era to see! What an era to see!
Okay, fantastic. I mean, we all can feel the change, Ajay. I mean, it is so nice to see that how the economy, how the entrepreneurship, how everything is pivoted for the country. So, how should one really reap benefits from this pivot which has happened? Stay with new economy businesses, look at innovators, look at disruptors.
See, you cannot build a portfolio based without ignoring what's happening around you. And I think what's happening around you. How do you order your food? How do you go shopping? How do you interact with the world? How do you do financial services for yourself? How do you invest money? If you look around what you used to do 5 years back, look around what you do today, dramatically different. And that's why your nature of investment need to change. The fact that these companies give you theme to invest. And it's not that the old fuddy-duddies have gone bad, like auto ancillaries, the new engineering companies coming up. They're cutting-edge companies coming out of the market. So I'm not saying everything old is bad, but the point is what you use is what you buy at the end of the day. And I think I'm the greatest believer on that. That experience counts at the end of the day. I buy Indigo shares because not recommending it, but buy because the experience is wonderful. I will not buy Air India shares even if they were offered today, given the awful experience. Market tells you everything out there when you experience it. And I would say that a portfolio of, let's say, capital market. We didn't have such a robust capital market. We didn't have stock exchange shares doing so well. We didn't have companies like managing the mutual fund business like CAMS or a depository company or AMC companies. Now, if you look at trajectory of the growth and the way that India is working as an investment platform, it's just incredible what these companies will look like 5 to 7 years from now. And therefore, your composition of your portfolio, you should be looking like things you use. If you're investing in mutual fund servicing business will become a big business. Depository is big business. Stock exchange is a big business. Consumer tech is a big business. And they're competing well. And you can't ignore that when you have disruptors like, say, Trend, if you don't latch on fast enough, I think you lose out a lot. If you're still onto the old retail model, I'm giving example of DMart, you will make poor returns in the market. So you got to catch the flying stars. You don't need to catch maybe strugglers like a UPL kind of a company or a DMart kind of a company.
So give us three ideas, Ajay, based on your understanding of the pivot in the economy, your consumption patterns, or where you think the next big wave is coming. Three ideas which may not make money today, tomorrow, this month, this quarter, but certainly could be great compounding machines for next 3 to 5 years where they will grow above India's nominal GDP. Because if companies are growing at 12-13% for 3 or 4 years, I mean, for long-term investors, that's like a gold mine.
See, you don't have to invent anything new. As I said, companies servicing capital markets, not just that one segment. is going to be enormous. So whether you invest in AMCs, whether you invest in companies like CMS, I'm not recommending it. I'm not supposed to. I'm just saying depository companies put together that whole, and some of the companies which are doing financial services company, but also doing investment in the market. And there are two or three of them which have given stellar returns. So I think capital market whole setup is, and including the stock exchanges, will become the biggest theme in the next 3 to 5 years in our view. The second big theme, I think, is going to be consumer tech. I think that's where the name of the game is going to happen. Consumer tech is going to be really very, very large. The third is newer plays in retail. I think it's not going to be the game about who put in more stores, and that's quite visible. It's a game about who's innovating new products. And I think that's where the old consumer companies will fall out. The new ones will come in. For instance, the new company which does only chemical-free cosmetics. Now, they may do well, sometimes they may not, but in a 3 to 5 year perspective, they will lead this world in terms of using cosmetics, using the daily use items, because they don't have anything to worry about. A liver has to worry about because its chemical product needs to be killed before they can become a chemical-free, product-driven company. So, consumer tech in the new age, non-chemical, organic industry, I think will be the biggest multiplier. And the last one is going to be, I still believe, companies which hold land. I think plantation companies will give enormous returns because today they are valued at tea and coffee basis. Once the development starts and the rules change, we're talking about square footage coming out of acres. We're talking of 20, 30, 40,000 crore valuation of some of these companies. So I think roughly you stick around this theme, and I think it should be fine. And last, autos. I think we will rule the world in auto. In auto ancillaries, there is second to none that India will be, and we are pretty large in Europe already. So I think put those 5 segments together, you are in a good wicket as far as investment is concerned.
Okay, super. You've run us through a number of themes. But that aside, Ajay, I just want to, and I'm curious because it's a newsy topic with what's been happening with the stimulus measures in China, etc. What do you believe the FIIs are going to do by way of flows in terms of an investment decision? Is China now becoming more attractive, or are we going to see the FII flows back to India because that has been scant at best?
Sometimes I believe it's like a zero-sum game that if money has to go to China, it won't come to India. With all the China stimulus at the end of the day, yesterday, the largest IPO, Hyundai, had its anchor portion guaranteed and confirmed. And a lot of the investors are from the US and including GIC's Singapore. I don't think it's a zero-sum game that if China has to get some, there is no argument. The China markets are really, really steeply undervalued compared to intrinsic worth. But then what do you do in China? You saw what happened to Baba. You saw what happened to, the way they struck down edutech, the way they struck down consumer tech companies. Friday, you go home and believe that you're going to have $1 billion bonanza on Monday morning. You come Monday morning, it's wiped out. So political framework of China tells me the story, the fact that you will never be comfortable investing big time in China. And if, say, Trump wins, I think why would the China story come out at all? And I think for India, Trump victory is the most important one because that will change the dynamics for India. The China plus one will start only when Trump wins. If Trump does not win and we have a weak democratic government in the United States, then I think China plus one will become an illusion. Trump wins, China plus one becomes reality in the real world. And that reality, FIs will recognize. And so I don't believe we have a great worry about what happens in China. What we need to worry about, and I think that's the more important point. What we need to worry about is our own policy initiatives. Do we match it? Does the RBI next time go cut the CRR? Because banks are not able to get the deposit. So cut the CRR, get them some money to lend. Funding and financing, thanks to capital market, has been robust in India. Left to the banks, we would have been ruined. So I would believe putting more money for investment from the bank's perspective would be the greatest addition India would do. And don't worry about China. I told you, Hyundai IPO got subscribed yesterday. So that should not worry you at all.
All right. Thank you so much, Ajay, for joining in. It's really been interesting getting your take, and hope you enjoy and make the most of the rest of your weekend.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.